Okay, students. So today we are going to revise the concept which is called as concept of depreciation. A very important chapter for your examination purpose. So today we are going to understand one question with respect to depreciation for your better understanding. Let us begin with a question number 2, or probably question number 3 we will start with, and then we'll go to question number 2. So let us begin with a question called Saria. Saria owns a business selling ladies' clothing. She maintains a system of double entry bookkeeping. The following occurred during the month of September 2020. First point, he purchased a motor vehicle on credit from Sharpie Motors for $6350. Point number 2, Ruhi, a credit customer, was declared bankrupt. So it is an indicator of irrecoverable debt. Owing Saria $1,200 means we are Saria. It is a business of Saria, and Saria has a credit customer called Rui, who becomes bankrupt. The debt is to be written off. Written off means we have to recognize the loss in the books. And how to recognize the loss? By writing off irrecoverable debt. Point number A, purchase journal entry to record the above transactions. The question is saying narrations are not required. So point number 1, we have to pass the journal entry. So what will be the journal entry, everyone? What will be the journal entry? So it will be motor vehicle account debit. It will be motor vehicle account debit and Sharpie Motors account credit. Sharpie Motors account credit. Sharpie Motors account credit. And the value is 6350. 6350. Narratives are not required. If it is required, we can write the narration being motor vehicle purchased on credit. But in this question, narratives are not required, so we are not going to write it. Point number 2, that is journal entry number 2. We have to write off the irrecoverable debt. So what will be the entry of irrecoverable debt? It is irrecoverable debt account debit, Ruhi account credit. So we will write irrecoverable debt. Irrecoverable debt is a loss to business. Irrecoverable debt account debit and Ruhi account credit. Right? And how much is the irrecoverable debt? The value is $1,200. So we'll write $1,200 here. $1,200. Again, narratives are not required. If it is required, we can write irrecoverable debt written off. Now, coming to the next point. Saria is preparing her financial statement for the year ended 30th September 2020. This is very important. Why, sir? Because 30th September 2020 is my financial year end. That means our financial year starts from which date? It starts from 1st October 2019 and it will be end on 30th September 2020. Right, so this is my financial year. She provides the following information with respect to fixtures and fittings. On 2009 October 1, can I say he's talking about the opening balances? 1st October 2019. Fixtures and fittings has a cost of 28,600 and the opening provision for depreciation for fixtures and fitting is given as 6185. We already know the opening balance of assets cost is always debit and provision for depreciation, since it is a liability for the business, its opening balance is always credit, right? So what we can write is, if you see the point number B, they are asking you the three accounts: fixtures and fittings account, provision for depreciation account, and disposal account. In provision for in fixtures and fitting account, I will write the opening balance on debit side, that is on 1st October 2019. We will write what? Balance brought down. And how much balance is given? 28,600. Always remember, assets account is always prepared at cost value, right? And opening balance of provision for depreciation is also given to us. 1st October 2019, balance brought down. balance brought down, which is 6185. You may please write a note that opening balance of cost is always debit and opening balance of provision for depreciation is always credit. Right? Now we will read question first, then we will evaluate. On 20th, 31st January, we sold fixtures. Whenever the word comes sold, guys, this means disposal. Whenever we sell assets, it is called as disposal. Sold fixtures and received a check for 1150. Now, whenever assets disposed of, we have to prepare an account called as disposal account, right? The question says we have sold the fixtures and we received the check. So always remember, we will write entry bank account debit, disposal account credit, right? So in disposal account, what is the date of disposal? It is 31st January 2020. So on 31st January, we will leave the first line because we will write some balances. 31st January 2020, we will write what? Bank. So what is the entry for disposal? Bank account debit, disposal account credit. And what is the value which we received for disposing the assets? It is 1150. So this is called as 1150 as a disposal value. Now, please understand, whenever we dispose the assets, we will first identify the cost of assets on which we have purchased, because since the assets has been disposed of, we will reduce the balance of fixtures and fitting and transfer it to disposal account. So in disposal side, we will write only the cost value. Now the question is, sir, why you have credited the disposal account on fixtures and fittings? Because we have sold the assets, right? And the assets cost is 1500. Since we have sold the assets, that means our cost has been reduced. The assets has been write off. So disposal value on the date of sale will be reduced from the cost value, that is 31st January 2020. Can I say the double entry will come here? The double entry will come here on what date? 31st January 2020. And where I will write what? Fixtures and fittings. Fixtures and fittings. Which value, guys? Cost value. And what is the cost? 1500. Now, since we are disposing the assets, can I say the accumulated depreciation related to disposal will also need to be reduced? So, this accumulated depreciation will be debited because provision is having a credit balance. So, if we need to reduce the provision, so we have to debit the disposal. So, on 31st January 2020, we have to write disposal. And what we need to reduce? The provision for depreciation. Now, for provision for depreciation, we have to prepare one working note, because we have to calculate. So working note number one, guys, working note number one. So there is a space here. So we can prepare working note number one. What we will write? Calculation of calculation of accumulated depreciation, or it is also known as provision for depreciation. Accumulated depreciation on disposal. Now this is very, very important adjustment, everyone, right? This is very, very important adjustment. For that, we have to find out two things. First, what is the rate and method of depreciation, and what is the accounting policy for charging depreciation. Now, if we see, the fixtures had been first purchased on 1st February 2018. That means this assets has been purchased 2 years ago. Purchase a new fixtures. So we have to write one entry first. We have purchased a new fixtures by and paying by check for 3500. So what will be the entry? Fixtures account debit, bank account credit. So on 31st March, 2020, we will write what? Bank account. And how much assets we have purchased? Of 3500. Saria's policy, this is important, na? Saria's policy, that means accounting policy, is to provide depreciation on fixtures and fitting at the rate 10% per annum, using which method? Reducing balance method. Which method? Reducing balance method. Right. Reducing balance method, and the rate of depreciation is 10%. So can I say on reducing balance method, the depreciation is charged on net book value? Not on cost, on net book value, right? Here now it is given a full year depreciation is charged in the year of purchase but none in the year of disposal. So this is very important, guys. Please read it carefully again. A full year depreciation is charged in the year of purchase. That means whenever we purchase assets, whether it is in the first month or second month or third month or on at the end of financial year also, we have to charge depreciation for full year irrespective of date of purchase. This is accounting policy. But no depreciation, none in the year of disposal. So question has been very clear. This says a full year depreciation is charged in the year of purchase. So if you purchase the assets, a full year depreciation is charged. But if you are selling the assets, you should not charge the depreciation in the year of sales, that is disposal. So how we will find the depreciation charge on the value of assets sold? We have given the date of purchase. So can I say on 1st February 2018, which financial year it should fall? It should fall. Can I say this financial year 2018 fall from the year starting from 1st October 2017 and end on 30th September 2018? Right? So what is the first financial year? 1st September 2017 and that ends on 30th September 2018. This is the year of purchase because the date is given as 1st February 2018. Sorry. The question is, oh, where it is gone. Yes. So the assets has been purchased in the month on the date of 1st February 2018, which falls in which financial year? 1st October 2017 to 30th September 2018. So can I say in this year we have purchased the assets? What is the next year? 1st October. This starts from 1st October now. So 1st October 2018 to 30th September 2019. Right? And the last financial year will be 1st October 2019 to 30th September 2020. This is the year in which we are working. That means year of disposal, right? Now, can I say in reducing balance method, first year cost and RBM is same, net book value is same. So first year depreciation is on 1500 multiply 10% of depreciation and whole year depreciation is charged. No month on month concept, guys. So it will be $150. From 1st October 2018 to 30th September 2019, now depreciation will be charged on net book value, that is 1500 minus depreciation, that is accumulated depreciation till date. So can I say it will be 1350 multiply by 10 upon 100 into 12 upon 12. So the depreciation in second year charge were 135. And in the year of sales, no depreciation is charged. Why, sir? Because this is an accounting policy that a full year depreciation is charged in the year of purchase, but no depreciation is charged in the year of disposal. This is the concept. This is the accounting policy. That's why we have written nil. So what will be the accumulated depreciation? What will be the accumulated depreciation? Sir, why you are writing accumulated depreciation? Accumulated depreciation means total depreciation we have charged on the assets which we disposed. And why we are calculating? Because accumulated depreciation means the actual consumption of assets. Right. So it should be reduced because we are making a fund in name of provision for depreciation. So provision for depreciation and accumulated depreciation is one and the same thing. So what is the accumulated depreciation till the sale of assets? 285. Now, can I say this 285 will be reduced from accumulated depreciation? So here I will write what? 285. So this is important to calculate what? The provision for depreciation on disposal. Now, we have to mark a double entry here. On 31st January 2020, what I will write? Accumulated depreciation, also known as provision for depreciation. And it comes as 285. Now, guys, we have to find out whether it is a profit or loss on disposal. So how we'll find? If cost, this side is called as cost side and this side is called as benefit side. You know na nominal account rule, all benefits and incomes are credit and all expenses are debit. So this debit side is a cost side and benefit side. So if my cost is higher than benefit, then it will be a loss. on disposal, and if benefit, that is credit side, is more than debit side, it is a profit on disposal. So in this case, if we total it up, guys, if we total it up, we will find that the total of debit is 1500, whereas total of debit credit is 1435. Right. So debit side is higher than credit side. You can check on your calcs, guys. Calculator, use your calculator. You will see that total here is 1435 and total of debit is 1500. So can I say my cost is higher than my benefit? That means it is a loss on disposal. So on 31st January 2020, we will write what? Loss on disposal. And how much is loss on disposal? 65. And this loss will be treated, will be transferred to statement of profit and loss. Which side? Expense side. Right. So what if benefit side goes up and the cost comes low? Then in that case, this loss will be called as profit on disposal. So it will come on the debit side. Clear? There will be no balance of disposal account because disposal means assets is not in existence. So there will be always transfer, whatever the balance come, it will be either transferred to loss account or profit. So if debit side is higher than credit side, it is loss on disposal, and if credit side is higher than debit side, it is profit on disposal. Loss on disposal will be transferred to statement of profit and loss under heading expenses, whereas profit and disposal will also transfer to statement of profit and loss under the heading incomes. I hope till here it is clear to you. Now we have to charge current year depreciation also. And what is the entry of current year depreciation? It is depreciation account debit, provision for depreciation account credit. So depreciation will always charge at the year end. My year end on 30th September 2020. This is what the question is given, 30th September 2020. So I will write an entry 30th September 2020, depreciation account debit. Depreciation, why it is debiting, sir? Because depreciation is a loss to business, because it is a reduction in value. So depreciation is debited, and since there is no cash outflow in form of depreciation, so it will be transferred to provision for depreciation. So what is the entry? Depreciation account debit, provision for depreciation account debit. It will also transfer to statement of profit and loss under expenses. Why? Because depreciation is also a revenue expenditure. It is also a revenue expenditure. Now the question is how to calculate. So this is working note number 2. This is second important working note to calculate current year depreciation. So let us see, there is space here. Working note number 2. And this is a past paper question, guys, and very important question, repetitively asked. Working note number 2. Write it down. Calculation of current year depreciation. Calculation of depreciation. We have already known that the method of depreciation is reducing balance method, RBM. 10% rate of depreciation is given, and on RBM, reducing balance method, depreciation is charged not on the cost but on net book value. So we have to find out first the cost value. We have already given the opening balance 28,600. We have purchased the new assets of 3,500 and we sold the assets costing 1,500. So can I say my total assets is now with me is 30,600? Sir, why you are sum up all the cost? Because this is an accounting policy. This says that a full year depreciation is charged in the year of purchase. So it is irrespective whether I charge individually or I add up all the values. Sir, why you have deducted this 1,500? Because this is already disposed of. If you see the account, this two amounts are debited and this one amount is credited. That means it is disposed. Now it is not in existence. So what is my balance of cost? The balance of cost is 30,600. If it is a SLM method, I would have been charged depreciation on 30,600 only, but the method of depreciation is reducing balance method. So for reducing balance method, I have to reduce the balance of accumulated depreciation also. And if you see the account, the what is the balance left in accumulated depreciation? 6185. This balance minus the balance of accumulated depreciation on disposal, because this balance has been now reduced because this assets has already been disposed of. So 6185 minus 285. 6185 minus 285. So if you calculate guys, you will see that the balance is coming as 5,900. 5,900. So cost minus accumulated depreciation, it gives you net book value. Which value? Net book value. And this net book value is also known as NBV, because in RBM method, depreciation is charged on this value. That's why we have calculated net book value. So 30,600 minus accumulated depreciation 5,900 will get the net book value of $24,700. So now what will be the depreciation? So the depreciation amount will be simple. It will be $24,700 multiply by 10 upon 100. That's give me $2470, the value of depreciation. So what we will do? We'll just write 2470 as value of depreciation, and then we will do the balancing of both the account. So how to balance it? Just total it up. The higher side, so if you add 28,600 and 3,500, you will get 32,100, 32,100, and on 30th September, that is on the financial year end, you will get what? Balance carried down. And how much balance you will get? 32,100 minus 1,500, you will get what? 30,600. And please don't forget to bring down closing balance to opening balance, because you will get 1 mark for same. So 1st October 2020, you will get balance brought down of 30,600, and same balance will be calculated for this account, provision for depreciation. So 6185 plus 2470, please calculate guys. What is the value which you get? 6185 plus 2470, you will get 8655. Since it is clearly visible that credit side is higher, so 8655 reduce with 285. Reduce with 285, you will get 8370, and this is my balance 8370. And this is called as balance carried down. On 30th September 2020, on 1st October 2020, it will be called as balance brought down. This is important. Whenever you're writing carried down, please put down the balance to brought down, and it will be 8370. And that's your depreciation question. Now, additionally, what I want to teach you is how to present a statement of profit and loss. Right? So I'm making an extract of statement of profit and loss and financial position if it is asked. Yeah. So in a statement of profit and loss, you will find the extract. Extract means the relevant value only. I am preparing a statement of profit and loss. So just write detailed dollar, and in expenses side, I will write two things. First is the depreciation. This is a revenue expenditure, which I have already calculated. Depreciation on fixtures and fittings. On fixtures and fittings, and which I already calculated as 2470. And there is one more expense, that is loss on disposal. This is also shown in statement of profit and loss. That's why, student, if you see, my dear friends, that I have put in brackets what the statement of profit and loss, because this will go to SPL, that is statement of profit and loss. Clear? So this is loss on disposal 65. Now, in a statement of financial position, I am preparing the extract only. In a statement of financial position, I will upload one more video. Means I will upload the series of videos on my YouTube channel. So you'll see all chapter. We will do a comprehensive revision for all the chapters, and you'll get the update on my YouTube channel under the tab called IGCSE. You go to IGCSE, chapter wise revision video will be uploaded there. So you are requested to please like, share, and subscribe the channel for this quick updates. And if you want this PDF, please DM me on the comment box. Right, just write notes. I will DM you. So in a statement of financial position, I will write what? Extract. So in extract, we will write cost, accumulated depreciation, and net book value. These three columns, I hope you know. If you don't know, please go and watch financial position chapter, the statement of financial statements. This is an important chapter for which, because in every chapter in section 4 you have to prepare the financial statements. So details, cost, accumulated depreciation, and net book value. So here I have to write the heading. This heading is non-current assets. Non-current assets. Non-current assets. You'll write what? Fixtures and fittings. Write fixtures and fittings. This is the name of non-current assets. Now, which value will come, sir? The closing balance. So if you see, the balance 30,600 is my cost. So I will write cost here, 30,600. What is the balance, closing balance of accumulated depreciation? It is 8370. 8370. So 8370. So please tell me, what is net book value? Net book value is nothing but cost minus accumulated depreciation. So please tell me, what is the net book value? 30,600 minus 8370. It gives me 22,000. Sorry. It gave me, so I'm cutting it, 22,230. So this is how you have to present in the financial statement. This is very, very important, students. If you DM me, if you want me to upload more such questions on depreciation, please let me know. I will upload 2 to 3 more questions on my revisionary video channels on my YouTube channel. Thank you so much. Till then, bye bye.